Investors have $6.2 trillion parked in low-risk money market investments right now. So now with news of rates going down, where are all those investors going to move that money to? You might hear that interest rates are dropping and that sounds like great news. But what does that mean for you if you're an investor? In this video, I'm going to break down for you where investors have their money now and what effect the lower interest rates may have on them and where they will move their money in the future and possible implications they may face because of it. Let's start from the beginning, all right? Where are investors placing their money now? Myself too, I've had some money that's on the sidelines for a couple years now, right? Because when interest rates went up, banks started offering these really high yield savings accounts and CDs. So last couple years, I know a lot of investors that have just parked their money in these vehicles because they're paying over 5% interest rate on them. So it's a good return and there's no risk on them usually too. So for example, you put $100,000 in a CD, you're going to make $5,000 back with no risk, all right? So a lot of investors have been parking their capital there too. And some people even with higher balances can go to money market accounts too, where they're paying very high interest rates as well. But here's the thing. They just released the news. Fed's probably going to drop interest rates maybe one or a couple times for the rest of the year. So lower interest rates, where's that going to lead us to? All right, there's a bunch of uncertainty in the world, but there's a lot of money that people have on the sidelines that need to be put into play now. So where are we going to go? So let's just assume that rates have dropped now. What does that mean? First thing, it means you can borrow money for cheaper. That's usually a good sign for people, maybe needing capital. I mean, the whole point of the Fed dropping the rates are they're saying that there's signs of a recession coming, right? So let's loosen up some money for the economy so people can borrow money and then put it back into the business, and hopefully it sparks a little more activity in the markets. So that's why the Fed's doing it, right? But what if you're an investor? What if you've had all this capital parked on the sidelines right now? You're not wanting to invest right now. I myself, like many investors, we just have money in CDs or money markets right now because we're making like over 5% return on it. That 5% yield you are making on a CD, it's going to be much lower, all right? If the Fed drops rates, their returns are going to go down to like 2% now, right? 2% is not good enough to beat inflation. As an investor, you're going to have to think about where do I want to move my money to? Because 2% is not good enough anymore, right? So where does that money need to go? You might think, well, maybe I get into the stock market right now. We're at all-time highs with the market. Everything's going crazy right now. Yes, you may think that, but just remember the Fed is expecting a recession. That's a little risky, right? So if you park your money into the stock market and we do hit a recession, maybe we're not going to see those high gains in the market that we've been seeing in the past couple years either, right? That's a possibility right there. Depending on what phase of your life you're in, you may not have the risk tolerance anymore, right? That's why CDs were such a safe place to put your money, because you knew you weren't risking it. Let's say that retirement's not too far in your future. You really don't want to put it into the stock market where it can go up and down, right? Because you don't want to have this nest egg saved, put it into the market, and then all of a sudden it takes a small decline and then you're ready to retire. That's going to be a bad move if you do it that way, right? So what do? You want to put your money in investments where you can make some income and appreciate in value as well. Where does that lead us to? You might have guessed this already too. It's back in real estate now. That's the investment, right? That's the safe investment that appreciates over time and gives you some type of income, meaning rents collected or something like that too, all right? It's a very traditional thing. I think a lot of investors backed off of it because we went through a little roller coaster market in the last couple years when rates went up. Prices took a small dip, but now they've rebounded, but rates are still high. Now they're talking about dropping rates to get more activity in the market now, right? I have a real life example of this. I have a really good client of mine, all right? He called me up one night and he said, "Hey, Jim, I have a CD that's maturing very soon. I'm thinking about buying again. What do you think?" That's a good question because I have CDs maturing soon too, and I'm thinking the same thing. So I'm trying to figure out what he as another investor is thinking too. So we had this conversation. He's just telling me, I know I can do another CD for another 6 or 12 months and make 5%. That's fine. That's great, right? But he's saying, can I make 5% in the real estate market and take advantage of the potential appreciation of value? And I said, I see where you're going with this, right? So we ran the numbers. We were looking at a house that was listed at $400,000. It's basically roughly the amount of his CD that was maturing as well too. So he said, Jim, if I gave you $400K, can you get me 5% return on this? And I'm like, I think I can. So we found a house. It was in Las Vegas, kind of in the southeast area. It will generate $2,100 in rent every month on that too. After we add in taxes, insurance, HOA, and everything like that, I mean, he's still making over $20,000 in net profits on this investment. And we were actually able to negotiate the sale price down to $390 because it's a cash offer now. If you crunch all the numbers, he's going to make a 5.34% return on his investment, which is great. It's going to perform just like a CD does, around 5% return on this money. And there's potential appreciation in value too. So if properties in Las Vegas continue to go up in value too, not only is he getting a 5% return, he's also going to have a appreciation in value of this asset that he owns now. So that's what he's doing. And I think it's a great play. Gets me thinking as well too. So when my CDs mature, where am I going to put this money? Well, I'm looking for real estate and I'm looking for good deals again, because if I can get the same return as if I were to park it in some CD or something like that and have appreciation, it's a no-brainer. Let's compare this CD example versus the investing in real estate, all right? So if you put down $400K on a CD and you earn 5% interest, you're going to earn $20,000 in 1 year, all right? So at the end of the day, you'll have the $20K interest you made and then the $400 that you originally invested. That gives you a value of $420,000 now. So if we look at the real estate example, if you invest your $400K and you take all your gross rents minus out your expenses, you're still going to make $20,000 in net profit on that, which actually turns out to be a 5% ROI as well. But the thing that you need to consider is that real estate appreciates in value usually. Even if we take the very, very conservative projection of 3% each year, your $400K property will be worth $12,000 more after 1 year. All right. So your $400K home is now worth $412K, and you still collected that $20,000 in rents as a net profit. Okay. So now your total investment is now worth $432,000 versus just the $420. Hey, and if you're enjoying this video right now, please be sure to subscribe to my channel so you get notifications when other videos like this are released by me. And hit that like button too, so people like you that want this kind of information know about it. So what are the pros and cons of each of these scenarios, right? So if you buy real estate, it could go down. If you're a long-term hold person, it will eventually go back up. Every little dip corrects and then starts going back up again too. So if you're not planning on buying and selling real fast, think the market value will less matter to you short term, all right? But you're gonna get the 5% return with the rents that you're collecting. Whereas if you have a CD, although it's lower risk, you're only gonna make that 5% return. You're not gonna have a 5% return plus the value of the CD going even higher. No, that is the return right there too. So I think if you're thinking long-term, I think real estate is still a great play on this because you have the long-term appreciation. Vegas has a lot of potential and you're still making the return. It's a disadvantage of holding real estate. Well, it's the liquidity of it, right? Of course, if you buy a house, it's gonna be harder to cash out in like a week. I mean, if you put a house on the market and you go through the whole escrow process, you're looking 30 to 45 days at least right now, right? So, I mean, holding real estate is much less liquid, and I think that's the drawback right there. So if you have plans of, I might need my money soon, maybe that's not the play for you, but if you're a long-term investor, that's what you gotta do. So the whole goal is, as rates go down, where am I going to place some of my money now that we're in these low risk, high yield type things? For me, it's gonna be real estate, and I think a lot of my clients are thinking the same thing too. I'm curious to hear what you might think as an investor. Where are you going to put your money? If you're in this situation and you have like a CD maturing soon, or you have all this money in money markets and you see those rates going down, where are you going to put the money then? I mean, drop me a comment. Let me know. Give me some ideas. I've been buying and selling properties for a really long time now. I have a lot of information about that on my YouTube channel. Another thing you can do in this market right now is to flip homes. Click over here to see the whole journey of my most recent flip, and click over here for a step-by-step on how I did that. Check it out, like, subscribe, and I appreciate you watching this video. I'll see you on the next one.